You're with us here on BTTV. Let's take a look at how things are shaping up this closing session. And of course, the big news today is on the RBI monetary policy highlights, the MPC hiking that repo rate by 35 basis points, however, trimming growth forecast. Markets are pretty much flat right now. It's a little mixed in terms of gainers and losers, but 0.3% lower right now, 18,574, Sensex at 62,465 is what you're seeing right now on your screen. Let's pull up some of those gainers and losers for you, give you a sense on really what's moving today. Some of your discretionary names, FMCG names, that's what's buzzing. BPCL up also about 2% or so today. Put up some of the other gainers as well to give you a sense of what else is grabbing the market today. A mixed bag. Axis, L&T, ITC, so it's really across the board. On the draggers side, let's pull up some of the losers for you as well in today's session and take a look at where some of that pressure is coming in from. Let's see what IT is doing today. There's not so much IT, but I think we've got some of the financials, Bajaj Finserv, indices, NTPC, some of the names there on the downside. Pull up a few more of those to give you a sense as well of what else is lagging. Tata Motors, SBI Life, or Bajaj Auto, so some of those auto names also on the downside in today's session. Tata Steel down over 1%, Reliance is down over 1%, and Sun Pharma as well. Gaurang Shah joining us this afternoon. Gaurang, a mixed bag as the market digests all the news today. We've got the monetary policy, got the trimming of the growth forecast, and then of course we'll come to the elections as well. But let me first get your take on the policy and the market reaction today.
Thank you, Aabha, for having me on the show. It's great to interact with you as always. So on the policy front, Aabha, 0.25 to 0.35 basis point was discounted and digested by the market. I think post the credit policy, the reaction from the market on the lower side and then a recovery is basically a knee-jerk reaction. At least that is what we would take it as. And with respect to the stance of the RBI and of course the governor as recommended by the MPC Monetary Policy Committee, our sense is that some of the positives that I would take from the statements made by the Honorable Governor is that inflation has peaked out. Possibly we could see lower levels, and the recent data shows that over the last 3 months we are heading lower as far as the inflation is concerned. So this is a positive. What happens in the next policy is tilted in both directions equally. It's well balanced. Whether there will be a status quo or whether there will be one more interest hike, I think that one needs to wait and watch, because we'll come to know as we go forward in terms of where the inflation takes us. So that is the part as far as the market expectation and what the rate hike delivered by the RBI in terms of upward revision of 0.35 basis point. With respect to the state elections, well, again, I think the outcome of the exit poll is welcomed by the market, and that's what market had gone into, with an assumption that in both the states, BJP will have a decisive move. With respect to the Delhi municipal election, I think it's a surprise with the kind of leads that BJP has got. But of course, the majority number, as we know, the last data is in favor of Aam Aadmi Party. So, and not to forget, last week we made an all-time high. And markets always, consolidate for some time whenever we've seen those highs. And it is always better, even before we crossed over to the all-time high, we saw markets Nifty consolidating between 18,200 and 18,400 for a brief period of time. And then when we crossed over, we made an all-time high. So this is a consolidation period. We would take it in the market. And it's always healthy to see correction, because that gives opportunity for new investors to come and invest into the market. And one more thing, Aabha, I think over the last 2 or 3 days, what we are seeing is that the market has been able to recover from the lows. That's a positive sign.
Agreed, Gaurang, definitely saw that today. Let's actually pull up, the governor's stance on growth. The RBI has lowered its GDP forecast for FY23 to 6.8 from 7% earlier. Shaktikanta Das spoke with respect to GDP in the quarters to come and gave us a rationale behind those estimates.
The biggest risks to the outlook continue to be the headwinds emanating from protracted geopolitical tensions, global slowdown, and tightening global financial conditions. Taking these factors into consideration, real GDP growth for the current year, that is 2022-23, is projected at 6.8%, with the Q3 at 4.4% and Q4 at 4.2%. The risks are evenly balanced. Real GDP growth is projected at 7.1% in the first quarter of next financial year, that is 23-24, and 5.9% in the second quarter of the next financial year.
All right, so that's the setup then on the macro environment. Gaurang, let's talk about some of the movers and shakers then. We've been seeing this consistent move on the likes of your HUL, ITC, Nestle, Britannia. How much further can some of those names go? They're already trading at such a premium.
So one thing that one more positive takeaway was that as the Honorable Governor mentioned, that inflation is peaking off. We are gradually seeing lower levels. Affordability can become much more comfortable. And the discretionary spend with respect to the consumer behavior, I think that is likely to pick up as we go forward from here on. And more importantly, Aabha, I think the good monsoon has reflected upon good agri output. And whenever there is good agri output, the semi-urban and rural India demand comes back very strong. And for most of the FMCG players, this is a huge market. I'm talking about semi-urban and rural India. Of course, there is tremendous traction as far as the urban part of India is concerned, but semi-urban and rural India really drives the numbers as far as volume growth is concerned. There was a concern of input cost also squeezing on to the profit margins, but that is also easing off with commodity prices coming a little bit lower. So our guess at Geojit is that FMCG will possibly be one sector that will be in the spotlight. And over there, you have likes of HUL, ITC, which was a laggard, is catching up. Tata Consumer, Godrej Consumer, Dabur, Emami, Nestle, Britannia, and likewise. And India is a consumption-driven story. Consumption can slow down in difficult times, but it will not stop. And whenever good times come back, I think the return of consumption is going to be equally stronger. So we remain positive on this sector and the stocks that we mentioned. And I think it's possibly time to nibble into some of these names as well.
All right. Time to nibble into some of these stocks, the word coming in from Gaurang. What about IT, Gaurang? Where do you stand on that pocket of the market? And would you still be going with the big boys or looking for value in some of the mid-tier names, which have also been seeing some buying interest of late?
So, yes, Aabha, I agree with the views that IT is under pressure, undoubtedly. This is one index which has been under pressure. There are some odd days when you see some kind of value buying coming, but that doesn't last or it doesn't stay at an elevated level. We are also of an opinion at Geojit, Aabha, that the third and the fourth quarter may not be something which will excite the market in terms of earnings. But we are equally confident that come next financial year, you are going to see significant pickup in terms of large ticket clients coming back, the talent pool increasing, and products and services offered by IT and platforms offered by IT companies will be in huge demand. So you will see a gradual pickup. It is not that it is going to be happening anytime sooner. There is some pain left for maybe a quarter or two, maybe third and the fourth quarter will be a little bit painful, but come next financial, we remain extremely positive on the IT sector. And I think this correction, Aabha, that we are witnessing in likewise, some of the large cap and mid cap IT names, I think this is a great opportunity for someone who's got 1.5, 2 year kind of a time horizon to build up a portfolio or maybe allocate a part of the portfolio to the IT sector. TCS, Infosys, HCL Tech, Tech Mahindra are the large cap names. KPIT Tech, Tata LXI, LTI Mindtree, L&T Technologies, Persistent Systems, and Coforge. These are some of the mid cap universe names that we have a buy coverage on.
All right. What about auto, Gaurang? And I'm curious on the auto pack, because just when we thought they were starting to get going, it's again looking sluggish. Some of them, trying to really play on the EV angle, but even that's still not really a certainty in the market, as they try and analyze what value that brings to the table. So within the auto pack, what's looking exciting to you right now, if at all anything?
So let me spin back in time. About 8-9 months back, Aabha, when the entire semiconductor chip shortages, logistics side issue was there. This was one of the underdog, if I can say that, or the auto sector. Most of the people recommended staying away from this particular sector. We were of a different opinion. We did acknowledge that yes, there are problems with respect to chip, semiconductor, new launches, logistics side, supply issues, and all that. But that does not mean you have to write off the sector altogether. And somewhere we believe that these kind of issues will be overcome with, and that's what exactly is reflect upon. And if you actually go to see in the last 6 odd months, the kind of number of new launches that we've seen, be it passenger vehicle, be it two-wheelers, be it three-wheelers, or be it commercial vehicles. And, unfortunately, we are in the last month of the year. So maybe, there might be not many launches that you will see in the remainder of this December month, 2022. But come 2023, I was reading a report. There are multiple launches that have been lined up in new avatar as well as new launches and across the categories. So we remain positive. So our preference is in the four-wheeler bank, if you will, Mahindra and Mahindra, Maruti and Tata Motors. In two-wheeler, according to our preference, it is Bajaj Auto, TVS Motor, and Hero MotoCorp. In the commercial vehicle segment, we are positive on Ashok Leyland. And in the tractor stroke earth moving equipments, we like Escorts. So, and of course, not to forget Eicher Motors amongst the commercial vehicle and premium motorcycle manufacturing companies in form of RE. So, but don't go all out into these names. Use corrections like this to start accumulating the stocks.
Okay, great. So that's the view coming in on auto. What are some of the multi-baggers according to you, Gaurang, in the broader markets? Where are you fishing these days?
So we are extremely positive about banking, about both private as well as public, and some of the strong NBFC names. And our estimates are that the credit demand is going to drive the net interest income and margins forward. And more importantly, Aabha, I think there is a huge turnaround in terms of the numbers coming lower with respect to gross and net NPA provisioning coming down. So if I have to start with public sector banks, top three picks would be State Bank of India, Canara Bank, and Bank of Baroda. Amongst the private sector names, top three names again, HDFC Bank, of course, with the merger of SDFC Limited coming through, ICICI Bank and Axis Bank. Amongst the NBFCs, we like Canfin Homes, we like Mahindra and Mahindra Financials, Shriram Transport Finance, to name a few. And my sense is that over the last 2 quarters, there's been significant improvement with respect to the earnings for banking and finance. And that is going to, get carried forward over the next financial year as well. So there are some good times for banking and finance sector.
Okay, let's go across to Tanya for some of the other buzzers out there in today's session. Tanya?
Absolutely, Aabha. So first of all, entire real estate pack is down today after the RBI raised its repo rate by 35 basis points. So experts believe that this hike will further impact EMIs and reduce home affordability. However, they also believe that as long as interest rates remain in single digits, the impact on housing will be best at moderate. So Oberoi Realty, Omax, Brigade Enterprises, Godrej Properties, all these shares were trading lower in today's trading session. Then HDFC AMC shares were also up nearly 5% today after the company announced that its promoters, ABRDN Investment Management, will sell its entire 10.2% stake in the company. And following the stake sale, ABRDN will cease to be a co-sponsor of HDFC Mutual Fund as well. Next, we have Bajaj Foods Limited. So the shares were up nearly 4% on the back of September quarter numbers. The profit is up over 43% at 41 crore rupees for the quarter ended September 2022 as against 29 crore rupees during the same quarter last year. Now, the company also announced that the conversion of its preferential shares in Hanuman Agro Food Private Limited into equity shares, making it a subsidiary of Bajaj Foods. Lastly, Lastly, we have Siemens. So the shares were up nearly 5% today as the company has emerged as the lowest bidder for a project for manufacturing 1,200 electric locomotive of 9,000 HP worth, 20,000 crore rupees in Gujarat. Now, remember, Indian Railways had floated this tender for in manufacturing and maintenance of 9,000 HP electric locomotives in April this year. Back to you.
That's quite a move on Siemens, up 5%. Have you taken a look at that one lately, Gaurang?
So, Aabha, we remain extremely positive on these names and, be it names like Bikaji Food, be it Cap Goods Engineering. And, the most important driving factor for capital goods engineering is going to be the spending from the government, both in terms of infrastructure creation, capex from the private sector, and of course, the order book execution run rate. So you have names like, of course, Siemens, L&T, KC International. One of the amongst the real estate sector that your colleague was just mentioning, I think this is a knee-jerk reaction. If you go to see long-term, sustainability of number of sales for real estate sector, my sense is that it is going to be very specific to the geographies, especially where there is demand and supply is less. So you have cities like Mumbai, you have cities like Bangalore, you have cities like Hyderabad, Andhra Pradesh, Telangana, Maharashtra, Karnataka, some pockets in central India. So you will see a demand coming through. So look at companies which have strong order book, less of leverage on the balance sheet, and of course execution capability and capacity. So you name like Shobha Limited, Prestige Estates, Godrej Properties, to name a few. And I forgot to mention one more sector when you asked me about preferred sectors. Defense is something that excites us to a great extent. And you have names like Hindustan Aeronautics, Bharat Dynamics, BEL, amongst the defense plays with respect to Make in India and FDI and defense that's being opened up. My sense is that these companies have very strong order book. They have got very strong capabilities and capacities for executing that order book. So defense should also be on your radar in terms of investment ideas.
All right, great. Gaurang, always a pleasure. Thanks for joining us on today's
so
show. And good chatting with you on a day when there's just been so much action in terms of news triggers. Market digesting all of that fairly smoothly. We're down about 260 odd points right now. And let's take you through some of the gainers and losers as we wind up this session. The markets did actually claw their way back a fair bit, but now we're back down about 100 odd points on the Nifty. Still not looking too bad given that we are consolidating at these all-time high levels. Some of the gainers on the list, including Asian Paints, HUL, for example. The Nifty itself down about 0.5% there. We'll take you through some of the other gainers on the indexes. Apart from that, BPCL has had a good day, up close to 2% there. We'll pull up some of the others for you as well, and you'll get a sense of the breakup. It's a fairly mixed bag in today's session. ITC, Axis, L&T. On the downside, pull up some of those names. We've got a mixed bag of IT, auto, and also some financials on the downside or on the losers list in today's session as well. NTPC, SBI Life, Bajaj Finserv, some of the names there not looking too hot in today's session at least. Let me just take a look also at some of the other buzzing stocks. We were talking about Bikaji Foods, we were talking about HDFC, AMC. GNFC is one of the biggest F&O gainers today as well. We are seeing some impact post the RBI rate hike on real estate names, so those have been in focus. Across the board, actually, fertilizers are buzzing. So we've also got FACT that's up about 10-11% in today's session. So we'll pull that one up for you as well. Hikal is up about 9-10% today. RCF is up 5-6% in today's session. So some of these individual movers are really seeing quite a phenomenal day in today's trade. Apart from that, Gujarat Ambuja Exports, for example, that's up about 9% so far in today's session. MRPL, IOB, Aegis Logistics, AU Small Finance has been looking good. Godrej Industries up 3.5%. AU Small Finance also up about 3% or so in today's session. Bank of India has had a good day. Jindal Stainless is up about 2-3% as well. Apollo Tubes, Jubilant Pharma, Jyoti Labs, some of the other movers, Sterling and Wilson. Chalet Hotels up 2.5%. Interglobe is up about 2% as well. Quest Corp, Marico, Easy Trip continuing a steady uptick post-listing, and a whole host of other names as well. So broader markets definitely saw a fair bit of action, plenty of it news-based, but even otherwise. That's where we leave it on today's show. Thanks so much for watching. Stock markets are like a roller coaster. If you're not careful, they'll take you for a ride. Mind your equity. How?
Log on to Business Today TV.
The MPC decided by a majority of 5 members out of 6 to increase the policy repo rate by 35 basis points to 6.25% with immediate effect. Now, I think this is one occasion where the market expectations and the decisions of the Monetary Policy Committee are by and large aligned. And there are several interpretations whether when the market expectation and the monetary policy decisions are aligned, whether they are, they have to be taken as a perfect monetary policy or otherwise, but that debate can happen some other time. Now, consequent to this increase in the policy repo rate by 35 basis points, the standing deposit facility, that is the SDF rate, stands adjusted to 6% and the marginal standing facility rate and the bank rate to 6.5%. The MPC also decided by a majority of 4 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. Let me now elaborate on the MPC's rationale behind these decisions relating to the policy rate and the stance of the monetary policy. Growth prospects across the world are dampening. Financial markets remain nervous and are characterized by high volatility and price swings. For the Indian economy, the outlook is supported by good progress of rabi sowing, sustained urban demand, improving rural demand, a pickup in manufacturing, rebound in services, and robust credit expansion. Consumer price inflation moderated to 6.8% year on year in October as expected, but still it remains above the upper tolerance band of the target. Core inflation is exhibiting stickiness. While headline inflation may ease through the rest of the year, and in first quarter of 2023-24, it is expected to rule above the target. The medium-term inflation outlook is exposed to heightened uncertainties from geopolitical tensions, financial market volatility, and the rising incidence of weather-related disruptions. On balance, the MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break core inflation persistence, and contain second round effects. I would read this sentence again. The MPC was of the view that further calibrated monetary policy is warranted to keep, number 1, inflation expectations anchored, number 2, break core inflation persistence, and number 3, contain second round effects. These actions will strengthen the medium-term growth prospects of the Indian economy. Accordingly, the MPC decided to increase the policy repo rate, as I have said, by 35 basis points to 6.25% and to remain focused on withdrawal of accommodation while supporting growth.
The men and women who built Indian industry, and the young guns who are shaping tomorrow's India. From storied careers to unicorn dreams.
The equity market is a dynamic space that needs sharper insights and perfect timing.
What stock, what fund, what to pick and what to sell.